Hello guys, very good morning, good afternoon and good evening for all of you. Yesterday we have started with chapter 3 and we have covered two sections in that is section 16 and 17. Chapter 3 talks about input tax credit and the computation of GST liability. Actually the provisions with respect to input tax credit is covered in section 16 to section 21 and also read with few sections like section 49, 49A, 49B. Actually 49, 49A and 49B talks about how to utilize the credit, whereas the other sections will talk about, that is section 16 to 21 of CGST Act talks about how to get the credit, means whether a person is eligible to get credit or when a person is not eligible to get credit, how can he get it is given. Clear? Yesterday in our previous class we have covered section 16 and 17 and also we have solved three problems on the same, guys. Chalo, a quick recap of whatever we have covered in our previous class. What is input tax credit? The tax which is paid on the inward supply of input service or capital goods is called input tax. And what do we do with input tax? We can adjust it against the output tax payable. And the tax which is paid under reward charge mechanism, and also in case of import, whatever IGST is paid can also be claimed as input tax credit provided all the conditions are satisfied. Clear? Next, what is capital goods? Capital goods is something which is capitalized in our books. Input is nothing but the raw materials which is used in the course or furtherance of business to produce my output. Then input service is something which I have taken. Why? To my business purpose, to provide my outward supply. Then coming to section 16. 16 gives there are four subsections here. It talks about eligibility and conditions for taking input tax credit. Section 16 subsection 1 tells a person should be registered under GST and whatever inward supply is taking, he should use it in the business or in the course of business. That is, in the business he should be using now or intended to be used at least in the future. Then coming to subsection 2, it has various conditions. A recipient cannot claim the input tax credit unless he satisfies the following condition. That is, he should be having the invoice or any other document issued by the supplier. Then the supplier should have given the details of whatever outward supplies he has made in GSTR 1 or using invoice furnishing facility. Then the recipient has actually received the goods or services. Even if it is received by the third party also, it's fine, but it is deemed to be received by the recipient. Then the supplier, whatever taxes he has collected from the recipient, he should have deposited that to the government. Only then the recipient can claim the credit of the same. Then coming to recipient should file GSTR 3B. That is, recipient in his GSTR 3B, he will give the details of whatever credit he is eligible for and he will claim it. So only then he will be able to claim the credit. Okay. Then there are some proviso telling if the goods are received in lots by the recipient, only when he receives the last lot, he can claim the input tax credit. Then coming to another proviso telling, if the recipient fails to pay the amount within 180 days of the date of issue of invoice, if he has already claimed the credit of input tax credit, then it has to be reversed on 181st day from the date of issue of invoice, and he has to pay it along with his output tax with interest at 18%. At 18%. Then coming to subsection 3. Subsection 3 will tell, if any GST is paid on the inward supply of capital goods, then there are two options. If it is added to the cost to claim depreciation under Income Tax Act, you cannot claim the credit of that under GST. So section 3 is telling you cannot claim double benefit. So if at all it is not added, means GST paid on the inward supply of capital goods, if it is not added to the cost to claim depreciation, only then you can claim input tax credit of the same. Then coming to subsection 4. Subsection 4 gives the maximum time limit to claim ITC, that is input tax credit, within the following. There are two dates. Earlier of the two is the maximum time limit. Which is it? So due date to file the September month, that is the next year September month, GSTR 3B, which would be 20th October of next year, or the actual date of filing the annual return. Actual date of filing, not the due date. Actual date of filing the annual return. Take whichever is earlier. That will be the maximum time limit to claim input tax credit, not to utilize, to claim it. Okay, sir. Next. Coming to section 17. Coming to section 17, 17 talks about apportionment of credit and block credit. Subsection 1 will tell if an input or inward supply is used for both business purpose as well as personal purpose, then whatever is attributable to only business purpose can be claimed as a credit. Okay. Next, coming to subsection 2. Subsection 2 tells whatever inward supply, whether input or input service or capital goods, if it is used for the purpose of providing both taxable supply as well as exempt supply, then whatever is attributable to taxable supply can only be claimed. Then here in subsection 3, they have also told what exempt supply includes. So exempt supply is defined in section 247, but in addition to that, some adjustments are given only for subsection 2. The adjustments are given in subsection 3. What are those? The exempt supply includes the sale of land and sale of constructed building included in negative list, but any other items in negative list will not be included for this purpose. Then transactions in securities will also be included. Then if a supplier who is supplying goods, if it is taxable under reverse charge mechanism by the recipient, if recipient is paying tax on it, then for the supplier it will be considered as exempt supply. This 3 adjustments is only for the purpose of subsection 2, guys. So don't get confused, because exempt supply as it is defined under section 247 will be applicable for the entire act. Then coming to subsection 4, an option has been given to the banking, financial institution and NBFC because they provide one major service, that is by way of providing loans and advances on which they charge interest or discount, which is exempt under GST. So that is one of the major outward supply for them, which is exempt. So they might be engaged in both exempt services as well as taxable services. So in that case, they should either follow subsection 2, or an option has been given under subsection 4 telling 50% of whatever input tax they have paid, irrespective of for what purpose they are using the inward supply, they can claim 50% credit, and remaining 50% will become lapse. But that 50% will not be applicable for the supply which are made for a registered person who is registered under the same PAN. In simple, I can call distinct persons, guys. Is that clear? And once the option has been exercised by the banking company or NBFC or financial institution, whether they choose subsection 2 or subsection 4, they have to follow the same thing throughout the year. They have to follow the same thing throughout the year. Then coming to subsection 5, subsection 5 list out certain inward supplies on which the credit is blocked. Means you cannot claim input tax credit. So we have covered all these scenarios in detail in our previous class, guys. So section 17 and 18 is dealt in detail. Okay. Yeah, we have covered till here. Let us go to the next part. That is section 18, guys. Section 18. So what does this section talks about? Availability of input tax credit in special cases or special circumstances. So section 18 talks about some special circumstances. So 16, 17, we have already seen who is eligible, when can I claim the credit, what are the conditions to claim credit, everything we have seen. Section 18 talks about some special cases. So some special cases are covered here. In this scenario, who can claim credit, how they can claim credit, it is been given here. Clear? Yes, sir. So section 18 subsection 1 has 4 clauses, A, B, C, D. All 4 are special cases, guys. So let me explain it one by one. First, before I explain clause A, some information with respect to registration is required. Registration is a topic which I would be covering it in the next chapter, next immediate chapter, that is in chapter 4. But some information is required for this point to be understood. So let me explain that. First, see section 25 of CGST Act tells a person, whoever is liable to get registered, he has to apply for registration within 30 days, guys. If I am liable to registration, assume on 10th June. Okay, when a person will be liable for registration and all, we will be learning it in registration chapter. Okay, sir. Now, I am liable for registration under GST on 10th June. So within 30 days, that is within 30th July, within 10th July, I need to make an application for registration. Okay, sir. So there is one rule called Rule 10. Important, please pay attention. Rule 10 specifies when a person is called registered. From what date is registered? So Rule 10 talks about Effective date of registration. Effective date of registration. So there are two scenarios covered here. So please pay attention, guys. What is it? First scenario. Assume on this day I am liable for registration. Okay. So within 30 days, I should apply for registration. Okay, let me take the days also. So I am liable for registration on 1st June 22. Okay, within 30 days, I need to apply for registration. So assume I have applied on 15th June. Within 30 days, yes, sir. Applied for registration. You guys can take down, but first listen, guys. Please do understand, then you can take down. So on 15th June 2022, a person has applied for registration. So assume the registration is granted on 20th June 22. So it will take some time to grant the registration and all. So grant of registration. Grant of registration. Okay, sir. Now please pay attention. So on 20th June 2022, I am registered under GST. I will be given something called as GST identification number. Once a person is registered under GST, he will be allotted a number called GST identification number, which is a unique number for me. Okay, on 20th June, identification number means I am granted the registration. But rule 10 is telling, if a person has applied for registration within 30 days of he becoming liable, then he is called registered person. He is called a registered person from when? From the date on which he was liable for registration. So I am called registered person from 1st June 22 only. So I am registered. So before 1st June, I was not registered. So I was not able to claim my input tax credit. Agree? Yes, sir. Now after 1st June, anything I purchase, whatever input tax I pay, can I claim the input tax credit? Yes, you can claim because you are registered now. So after June, anything you purchase or any inward supply, you can claim the credit, provided you satisfy all other conditions. Agree? So please be careful. What does rule 10 tells? If a person has applied for registration within 30 days of liable, if he is liable for registration, if he has applied for registration within 30 days, then he is called registered person from the date on which he was liable for registration. Clear? More about this we will be learning, because he has to follow some procedures with respect to whatever supplies he has made from 1st June to 20th June and all. We'll be discussing that in the further classes, guys. So please do understand that whatever is required for this topic, I would be explaining only that much. Clear? Because there are few more things to discuss with respect to this. I would be discussing it in the chapter 4. Okay? Yes. So pay attention here. A person was liable for registration on 1st June. He has applied for registration on 15th June. So he has applied within 30 days. So from when he is called registered person? From 1st June 2022. Okay. From that day, whatever inward supplies he is taking on which he has paid input tax, he can claim the credit of that. Sir, what about the inward supply before 1st June? He was not registered. So he cannot claim any credit. Yes, sir. But section 18.1, please pay attention here. 18.1a is telling a person is registered from 1st June as per rule 10. Yes. Before that day, immediately preceding that day means 31st May. 31st May 22, if he is having any stock, if he is having stock, means stock of raw material, finished goods, WAP, anything. If he is having any stock, when he would have purchased it? When he would have purchased it? When he was unregistered person. So he was not eligible to claim credit. Yes. But when is he using it? When is he using it? He is having the stock of raw material, finished goods or WAP on 31st May, which is the immediately preceding day on what he was registered. Okay, sir. So when will he be using this stock? Somewhere here, that is after he is registered. Agree? So section 18.1a is telling, okay, whatever stock he is having on this day of raw material, WAP or finished goods, he can claim the credit on that. He can claim the credit on that. This is one of the special case. Agree, na? Good, actually. It is logical. because you are registered from 1st June. Section 16 itself will tell you should be registered under GST to claim input tax credit. Agree, only registered person can claim. So if you have purchased anything before 1st June, you are not registered, so you cannot claim input tax credit. But section 18(1)(a) is talking about something which you have purchased before you are registered, but you will be using it after you are registered. Because if you are having any stock on 31st May 22, which is the immediately preceding date of the date of registration, then obviously this stock, when you will be using it, or if it is a finished goods, when you will be selling it, when you are registered, that is after on or after 1st June you will be selling it now. Yes sir. So in that case, whatever input tax credit is there with respect to this stock, you can claim the credit of it. You can claim the credit of it. Is that clear, guys? Is that clear? Yes. So let us see now. What is 18(1)(a)? This is how the things are connected, because if you don't know section 25, what is the time limit for apply for registration, or if you don't know rule 10, which talks about effective date of registration, then this point will not make any sense for you, or you will not be able to understand this point. First one, section 18(1)(a), person who has applied for registration within 30 days from the date on which he becomes liable for registration and has been granted such registration. So registration has been granted for him. He has applied for registration within 30 days and registration is granted for him. Registration can be granted after 30 days. But what is important here is he has to apply for registration within 30 days. That is important. Okay, sir. Goods entitled as on. He can claim the ITC on inputs held in the form of raw material, WIP. WIP means work in progress, finished goods, as on the day immediately preceding the date from which he becomes liable to pay tax. From which he becomes liable to pay tax. And here also there is some maximum time limit to claim credit. What is it? ITC must be availed within 1 year from the date of issue of invoice by the supplier. That means after 1st June you will be claiming the credit. Agree, on or after. So on that day the goods should not be older than 1 year. That is what they are trying to tell. Whatever stock you have purchased, which you are having, in my example, whatever stock you are having on 31st May 22, it should not be older than 1 year. It should be recently purchased. Only then you can claim the credit. So 18(1)(a) credit, or any, actually 18(1)(a), B, C, D, 4 items are there. Na? For all this condition is common. Credit should be claimed within 1 year from the date of issue of invoice. That is when you have purchased. Normally invoice will be issued when you have purchased it. Agree? So when you have purchased, when the invoice is issued, you see within 1 year you have to claim it. If already 1 year is expired, you cannot claim the credit on whatever stock you are having. Yeah, is that clear, guys? Yes, sir. Sure. So this is clause A, and I have first illustration here. Come to the next page, guys. That is, yeah, after 2 pages. Come to illustration 1, which is after section 18. Mr. B becomes liable to pay tax on 1st August. So he is liable for registration on 1st August. And he applied for registration on 17th August. So did he apply for registration within 30 days? Yes, sir. So what will be the effective date of registration? 1st August. Okay. He will be entitled to take ITC effective on. So immediately preceding day is what? 31st on inputs held in the form of raw material, WIP, finished goods, except on capital goods. 31st of what? 31st July. Just mention that. He will be entitled to take the credit of whatever stock he is having on 31st July. That is the day immediately preceding the effective date of registration. Clear? Yes, sir. And one more point actually. One scenario I have explained, whatever is covered under rule 10. Sir, what if the application is not made within 30 days? That is the second scenario. Let me explain that also. Actually, that scenario is not touched here, but it is good if you guys know this. Please pay attention. Second scenario I am explaining. On 1st June 22, I am liable for registration. I am liable for registration. Okay, sir. I have applied for registration on 15th July 22. 15th July, after 30 days I have applied. So applied for registration. Okay, sir. Then assume the registration is granted on 20th July. Registration granted. Now, as per section 25, whoever is liable for registration, they have to apply for registration within 30 days. This is what the section 25 of CGST Act specifies. Rule 10 will tell, if a person has not applied within 30 days, so he has violated section 25, no problem, registration will be granted. No problem, we will grant you the registration, but the effective date of registration will be 20th July. So you are called registered person. You are called registered person from what date? From 20th July, guys. So 20th July. So from 20th July, whatever you purchase, whatever input tax you pay on that, you can claim the credit. Sir, whatever the purchase which I have made before 20th July, can I claim the credit? No. Sir, what about the stock which I am having on 19th July? Can I claim the credit? No, sorry. The benefit is not given for you. Okay, you have not applied with for registration within 30 days. So in that case, we are not giving the benefit of section 18. So section 18 1A is only for those who have applied for registration within 30 days. So they can claim the credit of whatever input tax they have paid on the stock which they are having on the day immediately preceding the date of registration. Clear? So this scenario, whatever I am explained now, is not covered under 18(1)(a) because a person has applied for registration after 30 days. Registration is granted, no problem. Registration will be granted. It will not be denied. Okay, but the effective date of registration, if the application is made after 30 days, will be the date of grant of registration, guys. The date of grant of registration. So from this day, a person will be called as registered person. Anything he purchased after 20th July, he can claim a credit of it. But if he has purchased anything before 20th July, he cannot claim the credit. Even on the stock, whatever he is having on 19th July or 20th July, he cannot claim the credit of it. This is like a penalty which is levied for you indirectly, not directly. Agree? Because you have not applied for registration within 30 days. That is why I am taking off the benefit given to others. Clear, guys? So hope you guys got the point. So please do take down this if you want. So it's better you take down. So section 25 specify a person has to apply for registration within 30 days whenever he is liable for registration. Rule 10 talks about effective date of registration, from when a person is called a registered person. So the first scenario I have explained here, whatever is given in rule 10. Second scenario I have explained on the other side. So in this case, the effective date of registration is 1st June. Clear? If you're not done, you can just pause the video and take down. Yeah, this one. Take down this one. So ITC stock not available. ITC on stock which is there on 19th July is not available in this scenario. Fine, guys. We shall continue with the next case. Now 18(1)(b) talks about, sir, I was not liable for registration. Can I still take the registration? See, who is liable for registration is given in section 22, 23, 24. We'll be learning it in the next immediate chapter, guys. Clear? Okay, sir. Now, I am not liable for registration under GST, but still, can I take voluntary registration? Yes, always welcome, because obviously government will get more revenue. You are not supposed to get registered, but still you are telling you're willing to get registered, because whenever a person get registered, he is supposed to pay tax on his outward supply. Okay, now on his inward supply, can he claim input tax? Yes. On your outward supply you are paying tax, means on your inward supply you can claim credit of input tax. But sir, I am having a stock, for example. Now assume on 1st June 22 I have applied for voluntary registration. We call it as voluntary registration. Section 25(3) subsection 3 talks about voluntary registration. Okay, a person has applied for voluntary registration on 1st June 22. He has been granted registration on 5th June 22. Registration granted. Okay, sir. From when he will be called registered person? From 5th June. So here rule 10 is not applicable, because here person was not at all liable, na? So 30 days, 40 days, nothing is applicable here. Okay, so when a person apply for voluntary registration, on whatever date the registration is granted to him, that day is the effective date of registration. So effective date of registration will be the date of grant of registration. Okay, sir. So from 5th June, whatever he purchase, on that if he pay any input tax, he can claim the credit of it. Okay, sir. But the question is, sir, on 4th June he is having some stock. He has purchased this when he was, so he has purchased this before this. Agree? That is when he was unregistered. But when will he use this stock, guys? When will we use this stock? Obviously on or after 5th June. So they told, okay, whatever stock you are having on this day, that is stock of raw material, WIP or finished goods, claim the credit of it. Clear? You can claim the credit of that again within 1 year. Within 1 year from where? From the date of issue of invoice. So please don't count the 1 year time from here. 1 year time should be counted from date of invoice. Assume you have purchased an input on 10th April 22. This is the date of invoice. Let us take this as date of invoice. Okay, so now you are having this input as it is in the stock. You have not used it still. It is still there in the stock. Now you have paid 10,000 input tax on this. Can I claim the credit? Yes, sir, because still 1 year is not expired. As on 5th June or 4th June, still 1 year is not expired. So still you have a lot of time. You can claim the credit. Clear? Same scenario. Let me assume, sir, what if it is purchased on 10th April 21? So in that case, this goods is already more than 1 year old. So you cannot claim the credit of this. Even though if you are having this input in the stock on 4th June, you cannot claim the credit of it, as the goods is more than 1 year old. Clear? Already 1 year has been expired, because the input is purchased on 10th April 21. So 1 year is already expired on 10th April 22. Clear? We are talking about the stock which is there on 4th June. So you cannot claim the credit of that, even though it is there in the stock. Clear, guys? Same thing is applicable even for clause A also. That 1 year thing. Actually, it is applicable for all the clauses. 1 year time limit. Yeah. Let us read clause B now. Person who isn't liable to register, so he was not liable for registration, but obtains voluntary registration under section 25(3). Can a person get it? Yes. Under GST it is allowed. Okay. He can claim the ITC on inputs held in the form of raw material, WIP, finished goods, as on the date immediately preceding the date of grant of registration. So on what day registration is granted? Check the previous day. On that day, whatever stock you are having, you can claim the credit of that. But ITC must be availed within 1 year from the date of issue of invoice by the supplier. This is a common point. Is that clear, guys? And one thing you should observe in both these points, capital goods is not covered, guys. Capital goods is not covered. Clear, only inputs. That too, inputs in the form of raw material, WIP or finished goods is covered. So clearly they have told capital goods is not there. Obviously, when they are not specified, it is understood that on capital goods for class A and class B, you cannot claim the credit of it. Why? Because you were unregistered. Now you are coming to registered category or registration bracket. So in that case, only we will give credit for inputs, not for capital goods. Clear? Yes, sir. So I have second illustrations for this. Come to the illustration 2, which is on class B. Yeah. Come to this. Mr. Z applies for voluntary registration on 1st September and is granted such registration on 9th September. So the date of grant of registration is 9th September. He will hence be entitled to take ITC effective on 8th September on whatever inputs he is having in the form of raw material, WIP or finished goods, except on capital goods. So in the section, they have not spoke about anything about capital goods. So it is understood that when they have not mentioned, it is not covered on them. Okay, only inputs have been mentioned. That too, inputs in the form of raw material, WIP and finished goods. So what about capital goods? They have not mentioned it. So it means on capital goods under clause A as well as clause B, credit is not available, guys. In this case, only in this case, that is the capital goods which you have purchased before you registered. So can I claim that as a credit after I registered? No. Now, let me explain. Sir, what in this case? Let me take in this case only. What if I have purchased any capital goods after 9th September? Can I claim the credit? Yes, you can claim it. They are not talking about the capital goods. See, 18.1a, 18.1b, please stick to the scenario only. Okay, they are not talking about the inward supply which you will get after you get registered. They are talking only about the stock which you are having on the date on which your effective date of registration is done. Or sorry, actually the previous day we have to take. Yes, only on that day, one capital goods is excluded. If you purchase any capital goods after you are registered, yes, you can claim the credit, provided you satisfy all other conditions. Clear, everyone? Sure. We'll get back. So clause B is done. Next, clause C, clause D. Clause C, clause D, again, a special cases. Interesting, actually. Pay attention. See, all this, if you find it, do you guys find it logical? Yes, because see, you purchased something when you were unregistered. So you are not eligible to claim input tax credit. Okay, sir. But in this special cases, you will be using this stock only when you are registered. Because you are having this stock on the effective date of registration. So you have not used it or you have not sold it. So in this case, when will you be using it or when will you be selling it? After you are registered under GST. In that case, on selling, you will pay output tax. Yes, sir. So they told, okay, whatever tax you have paid on this inward supply, claim the credit on that. Clear? Yes. Chalo. Now coming to 18.1c, registered person who ceases to pay tax under composition scheme and switches to regular scheme means a person who was under section 10 is moving to section 9. Why? We have seen in section 10, if the turnover crosses the limit or if any of the conditions are violated, immediately a person has to switch to normal scheme. Agree? We have learned this in section 10, read with rules. Yes, sir. Now, next in that case, okay, let me explain this with an example. See, guys, I was registered under the section 10 composition scheme, CS. Okay, whenever I am under the composition scheme, you know, I cannot claim input tax credit on my inward supply. How much ever you have paid input tax, you cannot claim the credit of that. Okay, sir. Now, I was paying tax under the composition scheme somewhere on 31st December 22, my turnover crossed the limit. So assume 1.5 crore or whatever limit is applicable for me. I have crossed that limit. So in that case, immediately from 31st December itself, you have to go to section 9. Agree, na? You have to go to section 9. So now from 31st December, you are under section 9. For your outward supply, you have to pay tax at normal rates. So from 31st December, whatever you purchase, if you pay input tax, you can claim the credit, because now you are under section 9. You are eligible to claim credit. Okay, sir. Sir, what about the goods or stock which I am having before this? Means on 30th December 22, I am having some stock of what? Inputs as well as capital goods which I have purchased. Can I claim the credit of that? The answer is yes. You can claim it. You can claim it. Why? Again, same story. When will I be using this? I have purchased this stock when I was under composition scheme, but when will I use this, or when will I sell this? After I am under normal scheme. When I am under normal scheme. So from 31st December, I am paying tax as per normal rate on my outward supply. Can I claim ITC? Yes, you can claim it. So from 31st December, whatever you purchase, you can claim credit of it. But 18(1)(c) is talking about, sir, C for composition scheme. So C is telling, if you are having any stock on the date immediately preceding the date you are moving to normal scheme, then you can claim the credit of it. Inputs plus capital goods also here. Inputs, capital goods also. Please be attentive there. Alert. Okay, so what is it? He can claim the ITC on inputs held in the form of raw material, WAP, finished goods, and capital goods as on the date immediately preceding the date from which he becomes liable to pay tax under regular scheme. That is section 9. So in my example, whatever stock you are having on 30th December, because you started paying tax under normal scheme from 31st December. So on 30th December, whatever stock you are having, including capital goods, you can claim the credit. The other part I will explain, but let me finish 18(1)(d) also. 18(1)(d) similar to that. Sir, my outward supply was exempt before. It was exempt under section 11, read with notification. But on 1st January 22, government removed this exemption. They withdrew. Government has this right. Okay, they withdraw the exemption, but they cannot withdraw it retrospectively. Okay, so they can withdraw prospectively. Okay, so from 1st January, whatever my outward supply which was exempt before, so before it was exempt, so from 1st January it will be taxable. Okay, now the question is, whenever your outward supply is exempt, you cannot claim credit of input tax. Agree na? Yes, sir. Now, before 1st January, your outward supply was exempt, so input tax for you was not available. Agree? But after 1st January, this exemption was withdrawn, so it is taxable. Okay, sir. So can I claim input tax? Yes, you can claim. With respect to whatever input tax you pay on or after 1st January, you can claim the credit. Now the question is, sir, on 31st December 21, I am having some stock, sir, which I have purchased before 1st January. But I will be using this on or after 1st January. So they told, okay, whatever stock you are having in the form of inputs or capital goods, you can claim the credit of it. You can claim the credit of it. From when? From 1st January. Agree? Similar to our composition scheme. Before, I was not eligible to claim input tax. Okay, fine. But from 1st January, my outward supply is taxable. So I am eligible to claim input tax. So after 1st January, whatever you purchase, you can claim the credit. No doubt about it. Section 18 is not talking about that scenario. They are talking about the stock which you are having on 31st December. That is the date immediately preceding the date on which your exempt supply become taxable. Clear? Yes, sir. Chalo. Section 18(1)(d), registered person whose exempt supply become taxable. That is, you were under section 11, now you are going under section 10. It is like that. Sorry, not section 10, 9. Taxable. Or else let me tell like this. Exempt outward supply is becoming taxable outward supply. That's all. Exempt outward supply is becoming a taxable outward supply now. Okay, sir. Next, he can claim ITC on inputs held in the form of raw material, WAP, finished goods, and capital goods related to such exempt supply as on the date immediately preceding the date from which the supply becomes taxable. Immediately the date on which the supply becomes taxable. I have an illustration on this. We will do that. But before that, sir, there is some rule telling respect to capital goods. Sir, you can ask me, sir, in the first two scenario, capital goods was not allowed. Whereas in the second last two scenarios, third and fourth scenario, capital goods is allowed. Why is that? See, simple logic there. Reason. See, you are in both these cases, let me just, in both these cases, first two cases, you were unregistered person. Later you became registered person. Agree, na? So in that case, for capital goods, credit is not given. But you can see 18C and 18D, you are registered. You are registered under GST. You can observe the point itself is starting from registered person. So you are registered under GST. Okay, but under section 10. Now we are going to section 9. Okay, fine. So anyway, you are registered. Na? So let me give some extra benefit for you. Over and above what I am giving to unregistered person, let me give something extra for you. What they told? Okay, claim it on capital goods. Okay, sir. Then 18(1)D also, you are registered, but your outward supply was exempt. No problem. Now your outward supply is becoming taxable. So as you were already registered, let me give an extra benefit for you. That is in the form of input tax on capital goods. But as you know, capital goods is something which we have capitalized in our books. So we will use it for more than 1 year at least. Agree now? So we will use it. Capital goods always will be used for a longer time, like 2 years, 3 years, 5 years, 10 years. Agree? So you have purchased a capital goods and you are eligible to claim credit of it from the effective date. Okay, sir. But you would have already used it for some days now. Capital goods, you would have already used it for some days. So for that period, the credit has to be reduced. Yes, sir. So what is that? ITC on capital goods will be, you can claim it, but it will be reduced by 5% per quarter of the year or part thereof. Means 5% for every quarter or part of the quarter, the credit will be reduced. Even for a part of the quarter. From when? From the date of issue of invoice. Sir, what is it? Okay, let me just give an example. Okay, let me take this one, section 10 example. So on 31st December, my aggregate turnover crosses the limit. So I'm switching to normal scheme. So on 30th December, whatever stock you are having, you can claim the credit. Now on 30th December, you are having a capital goods on which input tax paid is rupees 1 lakh. Input tax you have paid 1 lakh. Now first check when you have purchased it. So we are talking about 30th December. Capital goods is there in your stock on 30th December. Okay, sir. When did you purchase it? Somewhere before. Okay. So let me take it on 5th August 22. 5th August 22. So you have purchased this capital goods on 5th August 22. So date of invoice is 5th August 22. Okay. So what is the time gap between these two dates? How many quarters are there? You need to check. Standard quarters. Please be very careful. Standard quarters. So how many quarters, guys? Come on, count it. So April, May, June is already done. July, August, September. So a part of the quarter also you should take full quarter. So because July is not at all there here, only August, a part of August and September, but still you have to consider full quarter. Okay. So July, August, September, 1 quarter. Then October, November, December, another quarter. So here also part of the quarter, but still you have to take full quarter. Please be careful. You have to calculate standard quarters. Don't count. Okay. How many months from 5th August to 30th December? Don't count like that. When it comes to quarters, it should always be a standard quarters. Okay. So there are 2 quarters. So for each quarter, we are supposed to receive we have to supposed to reduce 5%. So 5% into 2 quarters. How much? 10%. So on 1 lakh, reduce 10%. 10,000. So how much credit I can claim? Only remaining amount, 90,000. So this 10,000 is like, this capital goods is already used for 2 quarters when I was under composition scheme. So you cannot claim full 1 lakh credit. We will reduce 10,000. This is 10,000 is the credit which is for composition part. When you were under composition scheme, remaining 90,000, enjoy the credit. Enjoy the credit. So please be careful. 5% is per quarter or part of the quarter. And whenever you are calculating the quarter, it should be the standard quarter. You know, there are totally 4 quarters in a year. April, May, June, July, August, September, October, November, December. Then the last one, January, February, March. You have to follow the standard quarters. Clear, guys? Yes, sir. And there is a clarification given on that. So you need not worry. Sir, should we actually count the quarters from 5th August? Yes, quarters will be counted from 5th August only. But August will fall in which quarter? Second quarter. Take that quarter fully. Even part of the quarter should be taken fully. Okay. Then next quarter. So July, August, September, 1 quarter. Next October, November, December, another quarter. So both is part of the quarter, but still take full quarter. Okay. Next. In this case also, ITC must be availed within 1 year from the date of issue of invoice by the supplier. That means whether it is an input or capital goods, even capital goods, you have to claim the credit within 1 year, guys. You have to claim it within 1 year. If the goods or capital goods are older than 1 year, then you cannot claim the credit. Chalo. In the rule, there is some rule clarification given in the rule. What is it? We will see. As per rule 40, registered person shall within a period of 30 days from the date of becoming eligible to avail the input tax credit under section 18(1). So we have seen whatever stock you are having on a particular date, you can claim a credit. Okay. Within 30 days from that, you give the details of whatever stock you are having. That is, when the stock was purchased, when are you using it, are you actually having it on your stock, from whom did you purchase, all the details has to be given. Agree? So as per rule 30, a registered person shall within a period of 30 days from the date of becoming eligible to avail the input tax credit under section 18(1). 18(1) cover all the 4 cases, or within such further period as may be extended by the commissioner, shall make a declaration electronically on the common portal in GST ITC 1. ITC means input tax credit, yeah, to the effect that he is eligible to avail the input tax credit as offered said. So all this example, if I just tell, see, you can claim the credit of whatever stock you are having on 30th December. So within 30 days from here, you have to give the details of your stock in ITC 1, GST ITC 1. Same way here. Whatever stock you are having on 31st December 21, you can claim the credit of it. So give the details of that stock within 30 days. Within 30 days in GST ITC 1. Same way in other scenarios also. So now, whatever stock you are having on 31st May year, you can claim the credit of it, na? Yes, sir. So within 30 days, you have to give the details in ITC 1. That is, which stock you are having, when did you purchase. So some proof has to be given. Yeah, in GST ITC 1. Next, coming to subsection 2. Subsection 2, I have already given you. This is what is given in subsection 2, guys, which I have already covered. And this point is common for all 4 clauses. That ITC must be availed within 1 year. Yeah. A registered person shall not be entitled to take input tax credit under subsection 1, which covers all the 4 clauses, in respect of any supply of goods or services or both to him after the expiry of 1 year from the date of issue of invoice relating to such supply. Clear? So if the goods are older than 1 year from the date of issue of invoice, you cannot claim the credit of that under section 18(1). Please be careful. This 1 year limit is only for the 4 scenarios which is covered under 18(1). Don't get confused with whatever we already discussed under section 16(4). 16(4) is overall. It is applicable for all the inward supplies. Agree? So here 1 year time limit which is given under subsection 2 of 18 is only for the 4 special cases which are covered under 18(1). So please don't get confused with 18(2) and 16(4) time limit. 16(4) time limit is for all, in all the cases, whereas 18(2) is only for the 4 special cases. Is that clear? Yes. Note, here the maximum time limit for availing ITC is 1 year. Invoices more than 1 year old are not eligible for taking credit. Is that clear? Yes. And on this actually, 18(1)(d), I have a illustration. Just we'll go through it once. Come to the next part in illustration. Yeah. Third one here. This is on actually capital goods. I have shown the calculation. Illustration 3. Mr. C acquired a capital asset on 1st April 2021 and used it for production of exempt supplies only. So he has purchased capital asset on what day? 1st April 2021. So he was using it only for the purpose of producing exempt supply. Okay. Now in November 21, his supplies become taxable. So whatever was exempt became taxable. That means whatever exemption was given is withdrawn. Okay, sir. The cost of the asset was 2,50,000 and GST 18% was charged on it. Now, what is the date of invoice, guys? So on 1st April 21, the capital goods is purchased. So and it is understood that on that day only invoice is issued. Because they have not given it separately. So 1st April 2021 only is understood as date of invoice. Okay, sir. Hence, the ITC applicable is 2,50,000 into 18%, which is 45,000. So I am having this capital goods on the date on which my exempt supply became taxable. Can I claim full 45,000 credit? No, you cannot claim full 45,000. How much I can claim? Now, number of quarters of usage that have elapsed between April to November are 3 quarters. How is it? We'll count it. April, May, June, first quarter, 1 quarter. Then July, August, September, another quarter. Then October, November, December, another quarter. Sir, October, November, only a part of the quarter, still you will be taken as full quarter. So how many quarters you have used the capital goods when your outward supply was exempt? For 3 quarters. So for each quarter, we have to reduce 5%. Only remaining credit, you can claim it. So hence, there would be a reduction of 5% per quarter for 3 quarters, which is 15%. So from 45,000 reduce 15%, which comes to 6,750. So this is like, okay, this is the credit for the capital goods which was used when your outward supply was exempt. That is why we are reducing it. So remaining credit, you can claim it as per section 18(1)(d). Note that this ITC would be available from the date immediately preceding the date from which supply becomes taxable. Actually, exact date they have not given. They have given just November 2021. So on whatever date your exempt supply become taxable, immediately preceding that day, you will be eligible. As per 18(1)(d). You can mention that also. 18(1)(d). Okay. Rule 40 of CGST Rules 2017 states that the amount of credit shall be calculated by reducing the input tax at 5% for every quarter or part thereof. It shall be calculated from the date of issue of invoice for the capital goods. Actually, in this example or illustration, date of invoice is exactly is not given. So if by chance, see, when we are calculating time of supply, yes, everything will be given separately because each and everything plays major role. Agree, date of invoice, date of payment, date of supply of goods, everything will be given. But here and all, those dates, like, okay, those things, events might not be important. So that is why they are just given on 1st April, capital goods is purchased. So you should understand that on same day, the invoice is issued. Yeah, when it is not separately given. If it is separately given, accordingly take that only. Yeah, yes. So that 5% reduction is given actually not in section, it is given in rule 40. Okay, guys, let us get back. So we are done with 2 subsections. We'll continue with the third one. Now, if there is any transfer of business, then the transferor, whatever credit is having in the electronic credit ledger, which he has not utilized. So for example, assume, let me give an example. Now, Google, okay, not Google, don't want, because it is foreign company. Let me take any Indian company, just an example. Yeah. Now A Limited has been taken over by B Limited. A Limited has been taken over by B Limited. Now, A Limited is called the transferor and B Limited is called transferee. Now, whatever A Limited is having a credit in their electronic credit ledger, assume they are having 50,000 credit, which they have not utilized. They were eligible to use it, but they have not yet utilized it. So, in that case, the entire business of A Limited is taken by B Limited now. So, will this credit also be taken over by them? Yes, even credit will be taken over by B Limited. So B Limited can claim this or utilize this. Clear? Because obviously all the assets, liabilities of A Limited will become the assets and liabilities of B Limited. So here, electronic credit ledger, whatever credit you are having, it is like an asset for A Limited. So even that will be taken over by B Limited. Clear? So in simple, there are so more cases like merger, demerger and all. So whenever there is a transfer of business, in that case, whatever credit the transferor was eligible for, it can be claimed by transferee, provided certain procedure has to be fulfilled. What is it? We will see here. Subsection 3. Where there is a change in the constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of business with the specific provisions for transfer of liabilities. So liability of transferor will become the liability of transferee. The said registered person shall be allowed to transfer the input tax credit which remains unutilized. You are not yet utilized it. If you already utilized it, obviously you cannot transfer it. Once you have utilized the credit, it will not be there in your electronic credit ledger. in his electronic credit ledger, to such sold, merged, demerged, amalgamated, leased or transferred business in such manner as may be prescribed. So whatever credit the transferor is having in his electronic credit ledger which he has not utilized, it can be transferred to the transferee. Clear? What exactly is electronic credit ledger? There are totally 3 ledgers, guys, under GST. Whoever is registered under GST, on their GST profile, 3 ledgers will be there. That is electronic credit ledger, liability ledger, and cash ledger. Okay, I would be explaining these 3 at the end of this chapter. In the same chapter, I would be covering it at the end once we cover all this provisions. Clear? Sure. Now, there is one rule called Rule 41 of CGST rules which specifies the transferor, the person who has transferred the business, shall furnish the details of sale, merger, demerger, amalgamation, lease or transfer of business in form GST ITC 2 along with the request for transfer of unutilized ITC to the transferee. So the transferor, whoever has transferred the business, he has to give the details of is whatever sale, merger or demerger, whatever has happened, he has to give the details of that. Then whatever unutilized credit he is having in his electronic credit ledger, he need to give the details of that in ITC 2. Based on that, the transferee will be able to claim the credit, guys. Okay. Next, transferor shall also furnish a certificate signed, issued by a practicing chartered accountant or cost accountant certifying the sale, merger, demerger, amalgamation, lease or transfer of business. As a proof, the transferor should also furnish a certificate which is signed by a practicing chartered accountant or cost accountant with respect to the transfer of business. Okay. Third point, the transferee shall accept the details of input in the electronic portal and shall get credited to his electronic credit ledger. So whatever details is given by the transferor, it should be accepted by the transferee on his profile. So once he accepted, whatever unutilized credit which the transferor has transferred, it will be automatically credited to the electronic credit ledger of the transferee. Okay. And see, under GST, to the extent possible, they have made too many things automated. Okay, only means everything, they have tried to make everything online and automated. Next, last one. The inputs and capital goods so transferred shall be duly accounted for by the transferee in his books of accounts. Means whatever input and capital goods has been transferred by the transferor to transferee, the transferee has to record the same thing in his books as an assets. Clear, guys? Yes. So this is all about rule 41, read with subsection 3. Now subsection 4, reversal of credit under special circumstance. See, this is just reverse of whatever we have covered here. 18(1)(c), come on guys, 18(1)(c), just a quick recall. A person was registered under composition scheme, paying tax under composition scheme. On a particular day, he is switching to normal scheme. So on that day, whatever stock he is having, he can claim the credit of that. That means on the day on which he is switching to normal scheme, preceding that day, whatever stock he is having, including capital goods, he can claim the credit of that. 18(1)(c). Then coming to 18(1)(d), sir, my outward supply was exempt. Now it has become taxable. So on the day on which it has become taxable, on the previous day, whatever stock you are having, including capital goods, you can claim the credit of it. But for capital goods, for every quarter or part of the quarter, 5% has to be reduced. Yes. Now, same cases, but in a reverse manner, is covered in subsection 4. That is, let me first explain it. Sir, I was under normal scheme. I was under normal scheme. When you are under normal scheme, on whatever inward supply you have paid input tax, you have claimed the credit of it. Yes, sir. Input tax, you already claimed the credit. But now, I am moving to section 10. Section 10. So assume on what day? On 1st April 22, I am moving to section 10. I was under section 9, but now I am moving to section 10 from when? 1st April 22. So they're telling on this day, that is on 31st March 22, that is immediately preceding day, whatever stock you are having, when did you purchase this? Before 1st April. Before 1st April, you have purchased it. That is when you are under section 9. And obviously, you have claimed the input tax. Sir, I have already claimed input tax. Thank you. But subsection 14 is telling, you have purchased this stock, yes, when you were under normal scheme. You have already claimed input tax. But when are you using it? When are you using it? On or after 1st April 22. That is when you are under composition scheme. And when you are under a composition scheme, input tax is not available for you. So what are they trying to tell here is, you have already claimed input tax on the stock, whatever you are having on 31st March. Please reverse it. Please reverse it. Reverse it means you have to add it to your output tax. You have to add it to your output tax. Yeah, obviously, because 18(1)(c) and 18(1)(d) is giving benefit for you. So here, you have purchased the goods when you are under normal scheme. But when are you using it? When you are under a composition scheme. So in that case, if you already claimed the credit before 31st December, before 31st March, then it has to be added back to your output tax. It has to be added back to your output tax along with interest. Along with interest. From the date you have already claimed the credit till the date you add it to your output tax and pay it, you have to add interest also. 18% per annum interest rate. Clear? Okay. One scenario. There is one more scenario covered here. Sir, my outward supply was taxable. It was taxable. But it became exempt. It became exempt from what day? Let me take 1st July 22. From 1st July, whatever outward supply which I am providing, it became exempt. Government announced the exemption by way of notification. So in that case, when you were under taxable, you can claim the input tax, no problem. But after 1st July, anything you purchase, if you pay input tax, you cannot claim the credit of it. Yes, sir. Now, section 18(4) is talking about what about the stock which I am having on 30th June 22. I am having some stock on 30th June 22, which I have purchased when I was under taxable category. And I have already claimed input tax of it. I have already claimed the input tax of it. Okay. Now, when am I using it? When I am under exempt category. That is on or after 1st July. So in that case, they are telling whatever input tax you have already claimed it, you add back that to your output tax along with interest. Along with interest. Along with interest, guys. Is that clear? Yes. Logical, na? Yes. Because see, you have purchased something when you are under taxable or when you are under normal scheme. You already claimed the input tax credit. Fine. If you have used it when you were under section 9 or taxable category, fine. But when are you using it? When you are going under composition scheme or when your outward supply becomes exempt. In that case, when you are under a composition scheme or when your outward supply is exempt, credit is not allowed. Nah? So you have already claimed a credit of it when you have purchased it. So what should I use? You have purchased it, you have claimed the input tax. But when are you using it? When you are not eligible to claim ITC. So in that case, whatever ITC you have already claimed, add back to your output tax. Clear? Yeah. Come to subsection 4. Reversal of credit under special circumstances. Where any registered person who has availed of input tax credit opts to pay tax under section 10, or where the goods or services or both supplied by him become wholly exempt, he shall pay an amount equivalent to the credit of input tax. Both the scenarios are covered, guys. He shall pay an amount equivalent to the credit of input tax in respect of inputs held in the stock and inputs contained in semi-finished goods or finished goods held in stock, and also on capital goods. So capital goods are also covered here. Reduced by such percentage points as may be prescribed on the date immediately preceding the date of exercising of such option, or as the case may be at the date of such exemption. So with respect to capital goods, how much we will add back to output tax means we have to reduce a part of it, because you have used this capital goods also for certain period when your outward supply was taxable, or you have used this capital goods for a certain period when you were under normal scheme. So for that much period, we have to reduce it. Only remaining we will add back to output tax. Clear? Yes. Provided that after payment of such amount, the balance of input tax credit, if any, lying in his electronic credit ledger shall lapse. Means if you are having some credit in your electronic credit ledger which you are not used, then it will become lapse. It will become lapse. So what we will use, what we will add back is the input tax credit with respect to the stock, whatever you are having on the respective date, which I explained here. If you have already claimed the credit of that and you have utilized it, in that case, you have to add back to your output tax along with the interest. Clear? Okay, sir. Now, sir, I have the credit with respect to this stock in my electronic credit ledger. I have not yet utilized it. In that case, whatever credit you are having in your electronic credit ledger will become lapse. You cannot use it further. Clear? Yes. ITC to be reversed on inputs and capital goods is calculated separately for ITC of CGST, SGST, UTGST and IGST. And this is for everything, guys. Whenever you are calculating input tax credit, you have to calculate separately for all the taxes separately. That is UTGST, SGST, CGST. You should calculate separately. Clear? Don't mix one with the other. Whenever, not only here, I'm talking about anywhere, whenever you are eligible to claim credit, okay, nowhere it is specifically mentioned in the act, but still, whenever you are calculating the credit, it should be calculated separately under each head. CGST, SGST, UTGST, IGST. Clear? Yes. Don't mix with one with the other, because obviously it is a revenue of different governments, so you cannot mix match. Sir, can I mix IGST with CGST also? Don't mix it. While calculating the credit, please calculate it separately only, because the order of utilization is different. That is how to utilize the credit. There is one order, specific order given. So for that sake, at least you have to maintain all the credits separately, guys. Whatever credit. Actually, in your electronic credit ledger, it will be maintained separately only. Yeah. The reversal amount is added to the output tax liability of a registered person, and the details of such amount shall be furnished in GST ITC 3. So whatever credit is added back to your output tax, the details of that will be given in ITC 3, guys. Next, coming to capital goods. So even whatever credit is with respect to capital goods has to be added back, but some part has to be reduced. How much they have given here? Please pay attention. For capital goods held in the stock, the input tax credit involved in the remaining useful life in the months shall be computed on pro rata basis, taking the useful life as 5 years. So they are trying to tell, okay, let us take for any capital goods, the useful life as 5 years. Check for how many months you have already used it. For the remaining period, you will add back to your output tax. What is it? Example, capital goods have been used for 4 years and 6 months, 15 days. So you have to take 4 years, 7 months here. Even 15 days. Part of the month also will be taken as full month. The useful remaining life is 5 months, ignoring a part of the month. So now assume you have already used the capital goods for your normal scheme, or when your outward supply was taxable for 4 years, 6 months and 15 days. That means 4 years, 7 months. So how many months life is left still? Only 5 months. So for this 5 months, whatever credit is attributable, it has to be added back. So ITC taken on such capital goods C, ITC attributable to the remaining useful life is, okay, total credit on capital goods is C amount. Let us take amount as C. Okay. What is the total life? 60 months. Out of that 60 months, already you have used it for 4 years, 7 months. What is the remaining life? Only 5 months. So calculate like this. So whatever amount you get, that amount has to be added back to the output tax liability, guys. Output tax liability. Let me give an example for this. Yeah, let me take this only. So your outward supply was taxable. Now from 1st July 22, it become exempt. So on 30th June, you're also having a capital goods. You're also having capital goods on which you have paid 10,000 input tax. You have paid 10,000 input tax. When did you purchase this? So assume it was purchased 30 months before. So the date of invoice is 30 months before. Okay, sir. Now you have used this capital goods when your outward supply was taxable for 30 months. So the useful life of the capital goods is taken as 5 years, which is equal to 60 months. Okay. So what is the total credit for capital goods? It is 10,000. Okay. So what is the total life of the capital goods? 60 months, which is equal to 5 years. Okay. For how many months you will be using it after 30th June? 30 months. Okay. Because already 30 months is used before. So after 30th June, you will be using it for remaining 30 months. So 30 months, whatever is attributable for remaining 30 months, which is 5,000, only this much will be added back to the output tax. What about the remaining 5,000, sir? It is attributable to the taxable part. Okay. So the capital goods is used for 30 months when your outward supply was taxable. So for that period, credit is allowed now. So for that 30 months, we will reduce the credit. Only remaining part, we will add it back to the output tax. So this will be added to what? Your output tax. Because you would have already claimed full 10,000 credit. You would have already claimed full 10,000 credit. Yes, 5,000 is allowed for you. Remaining 5,000, which is attributable to the exempt part, should be added back. Should be added back. Even in case of capital goods, actually, whenever you purchase it, provided you have satisfied the conditions given under section 1617, you can claim the credit. So when you have purchased this capital goods 30 months before only, you would have already claimed the credit, full 10,000. But now, whatever is attributable to the exempt period, which is 30 months, we have to add back. We have to add back, which is 5,000. Is that clear, guys? Fine? Shalom. All these are little challenging calculations. Okay. But still, you should be knowing it. No options for us telling, sir, can we take it as a reason? This is challenging. Can we exclude it? No, guys. So we are in the last stage of your professional exams. So we're expected to know each and everything, whatever is covered in your syllabus. Okay. Actually, on section 18, they are not asked questions in the exam, but still we don't know. Actually, it is an important topic. We don't know. Any day in any future exams or attempts, the questions might come. So please be careful with it. Chalo. So coming to subsection 5, the amount of credit under subsection 1 and the amount payable under subsection 4 shall be calculated in such manner as may be prescribed. Means they have referred it to rules. So whatever credit is attributable as per subsection 1 and subsection 4, they are told it will be calculated in such manner as may be prescribed. Means they try to refer it to the rules. Clear? Yes, sir. Then the last subsection, guys. Last subsection. Treatment of input tax credit on the supply of capital goods or plant and machinery. Now, see, when you purchase the capital goods or plant and machinery, You have paid a tax on it. If you have satisfied all the conditions given under section 1617, especially 16.3, which tells it is not added, the tax part is not added to the cost of the goods or the capital goods for on which you are claimed in depreciation under income tax. If you have not added the GST to the cost, you can claim the credit. That is what section 16.3 specifies. So assuming all the section 16 and 17 conditions are satisfied, when you have purchased capital goods or plant and machinery, you have already claimed the credit. You have already claimed the credit. Okay, sir. Now, after using it for some period, you are selling it. After using it for 1 year or 2 years, you are selling it. So, actually, capital goods, no one will purchase it for the purpose of sale. You will purchase it for the purpose of using it in the business. Agree, na? So, there is an accounting standard 10 also. In accounts, there is an accounting standard called accounting standard 10, which talk about fixed assets, plant, property and equipment. Now it is called plant, property and equipment. So any fixed assets is purchased for what purpose? Not for reselling it, but to use it in the business. But for any reasons, can it be sold? Yes, it is possible. After using it for 1 or 2 months, assume it became useless for me. I want to change the machine. I want to change the asset. My asset became outdated. Can I sell it? Yes, no one will object for you. You can sell it. But on that sale, it is treated as outward supply. You are supposed to pay tax. And what amount the tax will be calculated is given in subsection 6, guys. Clear? Because the people may try to manipulate by selling the capital goods for a very less price. They have purchased capital goods for 10 lakh. On that, assume input tax they have claimed. Okay, let me just take an example of it. Assume, guys, I have purchased a capital goods for cost is 10 lakh. On this, I have paid GST 1 lakh. Okay, so the total is 11 lakh. So I have claimed the input tax credit of 1 lakh. When I have purchased itself, I have claimed the credit of it. Okay, sir. Now, after 1 year, I sold this capital goods. Sold capital goods for only 1 lakh. Only 1 lakh. Very less price. I have sold it. So on this is my outward supply. Yes, sir. So on this GST applicable is how much? Only 10,000. Agree 10. Assuming the GST rate is 10%. So you will pay only output tax how much? 10,000. But input tax how much you have claimed? 1 lakh. So to avoid this misuse by the people, they have included 18 subsection 6 telling. What is 18 subsection 6 is telling is interesting actually. You take 2 points. What is it? What is the tax you are supposed to pay on your transaction value? On your outward supply, what is the transaction value? 1 lakh. On that 10%, assuming 10% is the GST rate, how much? 10,000. Okay, take that. Or, so this is the tax on transaction value. Okay, on your actual sale. Or, what is the credit you have already claimed on this capital goods? 1 lakh. Okay, take it. But don't straight away take 1 lakh. Why? Because you have used this for 1 year. Na? You have used it for 1 year and you have sold it. Obviously, there will be a depreciation for the usage. Yes. So from 1 lakh, reduce 5% for each quarter or part of the quarter. For how many quarters you have used? 1 year means approximately 4 quarters. Na? 1 year means 4 quarters. Okay, sir. So 4 quarters you have used it. Reduce 20%. Agree. So how much is the remaining amount? 80,000. What is the remaining amount? 80,000. So whichever is higher, 10,000 or 80,000, which is higher? 80,000. This is what the tax you are supposed to pay. Good, na? Yes, sir. So here they are trying to tackle the misuse of the law by purchasing the capital goods for higher value. They will sell it for any of their friends or related person or whoever it is for a lesser price to pay less tax. So they don't, no, sorry, thank you. You cannot do it. You already claimed so much of credit. So from that, for every quarter or part of the quarter, reduce 5%. Compare that with your tax on your outward supply. Whichever is higher, pay that much. That is what is given in section 18, subsection 6, guys. Let us see this. Treatment, see here I have told 1 year. So 1 year I have taken 4 quarters, but I have told you while calculating the quarters, you should always take standard quarter. Standard quarters, guys. Okay. In case of supply of capital goods or plant and machinery on which input tax credit has already been taken. So you already claimed input tax credit. Only then 18(6) is applicable. Sir, when I have purchased capital goods or plant and machinery, I have not claimed the credit. In that case, 18(6) is not applicable for you. 18(6) is not at all applicable for you. Okay. The registered person shall pay an amount equal to the input tax credit taken on the said capital goods or plant and machinery, in my example 1 lakh, reduced by 5% per quarter of the year or part thereof from the date of invoice. So you have to calculate the number of quarters from the date of invoice till the date of sale. Date of sale of capital goods or plant and machinery. Okay. Or the tax on transaction value, which is like transaction value, sale value is 1 lakh. On that, how much is the tax? 10,000. Or plant and machinery determined under section 15. So what is the tax on the transaction value as per section 15, which talks about value of supply, whichever is higher. Illustration 4. We will do that later. Provided that where refractory bricks, molds and dies, jigs and fixtures are supplied as a scrap, the taxable person may pay tax on the transaction value of such goods determined under section 15. So if by chance if you are supplying any refractory bricks, molds and dies is the machines which are used to give shapes to the products, guys. Clear? Or jigs and fixtures. Jigs and fixtures are the instruments which are used to produce large number of the goods in the same what do we call, in the same shape or same products. I want to produce same kind of pen, thousands. Okay, same shape, same length, same kind, everything. In that case, we use something called as jigs and fixtures. Agree? So if this are supplied as a scrap, then section 18(6) is not applicable. Section 15 will be applicable. As per section 15, whatever value of supply is there, on that the supplier will pay tax. Clear? So please be careful. 18(6) is applicable only when you have already claimed input tax credit when you have purchased the capital goods or plant and machinery. So obviously that means you have satisfied 16, 17 conditions and you have claimed it. After some time you are selling it. Only then 18(6) is applicable. If not, if 18(6) is not applicable on the sale of capital goods, obviously section 15 will be applicable, which is value of supply, which talks about value of supply. On that, the supplier will be liable to pay tax. Is that clear? One illustration I have given on this. Come to illustration 4. Yeah. Illustration 4. X Limited purchased a machine for 1 lakh and brought it on 1st August 2021. So date of purchase. So let us take it as date of invoice. And paid IGST 12%. He availed input tax credit and used the capital goods in his business. On 5th November 2021. So this is the date of sale. He resold it as a second-hand machine for 65,000. So the transaction value is 65,000. Find out the amount of tax payable or ITC reversible in the above case. So the date of invoice is 1st August 21, guys, and the date of sale is 5th November 21. Agree, na? Yeah. So date of invoice, date of resale, I can consider. Date of resale. So how many quarters in between this? You check it. So April, May, June is not there. Then July, August, September, 1 quarter. Then October, November, December, 2 quarters. 2 quarters. See, don't count the quarters from year to year. Sir, August, September, October. Then November, December, January. Don't count it like that. That is why I told you standard quarters. So it should be like July, August, September. Part of the quarter, take it full. Then October, November, December, part of the quarter, take it full. So how many quarters? 2 quarters. So 10% has to be reduced. So input tax on 1 lakh. On 1 lakh, 12% tax means 12,000. Okay, sir. Then 5% per quarter has to be reduced. That is the time period between the date of invoice until the date of resale. So 5% into 2 quarters, which is 10%, reduce it from 12,000, 1,200. What is the remaining amount? 10,800. Okay, sir. This is option A. Then coming to option B, transaction value 65,000. What is the tax on that? 12%. 65,000 is the transaction value as per section 15 into 12%. What is the amount? 7,200. Sorry, 7,800. Let us keep this as B. Which is higher? 10,800. 10,800. So 10,800 is higher. So the supplier is supposed to pay how much tax? 10,800. So 2 quarters have elapsed and therefore 2 into 5%, that is 10% would be the reduction from ITC for usage. Tax on transaction value or GST would be computed and compared to the net ITC available. The higher of the two would be payable for disposal of goods. So in this case, how much is that? 10,800. Okay. Next, if the supply is intrastate, it should be payable in two equal parts. That is 5,400 CGST, 5,400 SGST. Means if you have sold the capital goods outside the state, sorry, within the state. If you have sold the capital goods outside the state, then you have to pay straight away 10,800 as IGST. Clear, guys? Yes. So this is all about section 18, guys. So 18 has totally 6 subsections. Each one of them we have covered in detail. Clear? Especially 18.1 has 4 clauses. 18.1 A, B, C, D. So like, okay, important, but still, as I told you, they are not asked it in the exam as of now, till now. Okay, that doesn't mean that they should not ask it in the future. So it is always good for you to know whatever is covered in the syllabus, guys. Is that fine? Sure. So now we will go and do some problems. Come to the problems. Yesterday we have covered 3 problems, guys. So let us do some remaining problems. Some problems. Yeah, till 3 we have done. Come to the 4th one. From exam point of view, actually 16 and 17 is very, very important. 16 and 17. Yeah, chalo. Let me start 4th one. Let me read it. Bharat Limited, a registered supplier under the regular scheme, is engaged in the manufacture of electronic items. The following details for the month of March 2019 are available. So this is asked in December 19 for 5 marks. And guys, see, so those who have not yet taken the printout of the material, I think soft copy will be updated in the app. So please make sure that you have a hard copy of the material ready. So please take a printout of it, and whenever you are watching the lectures, please have a hard copy along with you and also your notebook. So if there is anything important or if there is anything which you have to remember or important, please try to underline. So when I am explaining also, I will underline some important things. Even in the question, if there is something important, you can note few things there. Agree? So please do have the hard copy of the material, and also whenever you are watching the lectures, both of the things should be available. And I suggest you guys to watch the lectures through your laptop if you have, or through your tab. That would be the best one instead of mobile. If you don't have, then the second priority you can give it to mobile. Okay, at least if you are not having, at least any of your family members, if they are having laptop or anything, please borrow it during the time you study and watch the lectures in your laptop, guys. Because if you are watching on your mobile, in between some notifications will be there, messages will be there which might distract you. So I want you guys to be fully attentive whenever you are watching the lectures. Yeah. So please take this seriously, and whenever you are studying, as I've already told you, please try avoiding the mobile, guys. Try avoiding the mobile, and if by chance if you don't have any other option, yes, you can watch the lectures on your mobile, but make sure that any notification you will keep it in off mode. Okay, so notification and all, you just keep it in off mode when you guys are watching the lectures, and don't give any importance for any messages which is coming in between and all. Yeah, chalo guys, let us start with machine acquired for manufacture, which is a capital goods. Can I claim the credit? Yes, you can claim the credit, provided section 16.3 condition that depreciation thing is satisfied. Okay. Electronic items utilized in the manufacture, you can claim the credit. Trucks used for the transporting materials, claim the credit, you can claim the credit. Food and beverages consumed within the factory, you cannot claim the credit. 17.5 blocked. Advise the ITC eligibility for the company. See, only 4 items are given, guys, for 5 marks. How can you lose marks? You cannot even lose 1 marks here. Okay, and see here I know you can easily take care of the presentation answer, you will write it, but please make sure that you write the notes also. One by one, let us start with the calculation. Computation of ITC available. Machines acquired for manufacture, which is capital goods, 10 lakh full credit is available. I have given a note here. Machineries acquired for manufacturing of electronic items is eligible for ITC. However, depreciation has to be claimed on the net value excluding GST. That is, GST should not be added to your cost to claim depreciation. That is what section 16.3 is telling. You can also mention the section. It is assumed that the GST amount has not been considered for the purpose of depreciation under section 32 of Income Tax Act. So GST is not added to your cost to claim depreciation. Okay, second item. Electronic items utilized in manufacture. Note 2. Can you claim the credit? Yes, as it is used in the process of manufacture or used in the business, you can claim the credit. Second note. The ITC would be fully available as these are used in the course or furtherance of business as per section 16 subsection 1. Next, third one. Trucks used for transporting materials. Credit is available. For on the transportation of goods, credit is not blocked. Only for the transportation of persons. That too, if the seating capacity is less than or equal to 13%, then only credit will be blocked as per 17.5. So here credit is available, guys. Note 3. ITC on motor vehicles for transportation of goods has not been blocked under section 17.5 of CGST Act. Hence, it is eligible for input tax credit. The last item, food and beverages consumed within the factory, nil, because it is blocked under section 17.5. As per section 17.5 of CGST Act, ITC on food and beverages is blocked credit unless they are used to make outward taxable supply in the same category, or it is obligatory on the part of the employer to provide such services to its employees under any law. Only in this case credit is allowed, but in the question nothing is mentioned, so it is understood that it is not obligatory for the employer to provide it and it is consumed within the factory, so credit is not available. However, in the present case, food and beverages have been consumed within the factory, hence not eligible to avail credit. So the amount of credit is nil there. Clear? So this is all about problem number 4, which is asked for 5 marks, guys. Clear? You should get 5 out of 5 on this kind of questions, guys. Clear? Now, just out of syllabus thing. Sir, yeah, guys, tell me which are the 3 fastest modes of communication? Come on, this is just a general question, not related to my subject. Which are the 3 fastest modes of communication? Come on. Which are those? One by one. Chalo, let me tell. First one, telephone. Agree na? Telephone. Telephone includes mobile, WhatsApp, whatever is there in that category. So WhatsApp, Instagram, whatever you do, use it in your telephone. So telephone includes mobile phone also. Okay. One thing. Second thing is television. That is especially news channel nowadays. Okay. We get scared when we watch that. They will tell, oh, 4th wave is coming. You get alert. So they will show us as if, okay, our life is completed. We are about to go anta. We are about to go. That is how they show the news. Okay. So television. So one of the fastest modes of communication to reach the mass people. Okay. The last one and the most important one. Come on. The last one and the most important one is telewoman. Telewoman. So that is one of the fastest mode of communication. And if you still want the fastest mode of communication, then tell a woman and tell her not to tell anyone. So that will reach many people. Clear? Yes. So it was just the thing out of the syllabus. So keeping joke aside, let us continue, guys. Come on. Coming to 5th problem. Coming to the 5th one. Determine the amount of input tax credit admissible under the provisions of CGST Act 2017 to PQR Limited in respect of the following transactions which have taken place in the month of January 2020. Take note that all the conditions necessary for availing the ITC have been complied with and fulfilled. Okay. And the registered person PQR Limited is not eligible for any threshold exemption. Means he has to pay tax on his all the outward supplies. Clear? There is no threshold exemption available for him. Okay. Support your answer by giving brief reasons. Okay, one by one. Goods used in the constructing of additional floor of office building at Jaipur, whether it is office building or whatever, goods used for the purpose of construction on his own account, credit is not available. 17.5. Okay, sir. Next, packing materials used in the factory, allowed. As it is used in the business, credit is allowed. See, whenever any item is not specifically blocked, in that case, if the sections 16 and 17 conditions are satisfied, means credit is allowed. Agree, packing material and all, nowhere it is covered as block list. So that means the credit is allowed provided it is used in the business and other conditions are satisfied. In the question itself, they have told all other additional conditions necessary has been fulfilled at them. Okay. So in this case, credit is allowed as it is used in the business as per section 16.1. Next, goods destroyed in flood waters due to natural calamities. So it is also blocked. As per 17.5, you have lost the goods. Obviously, there is no outward supply. You are not paying output tax. So in that case, you cannot claim input tax credit as per 17.5. Next, paper purchased for computers, printing and for photocopying machine used in administrative office. Credit is allowed. Used in the business, so credit allowed. Next, inputs used for test or for quality control check. Here also allowed because it is used in business. It is used for the purpose of business. So as per section 16.1, any registered person, if he is using any of the input service or capital goods for business purposes, credit is allowed. And nowhere else, even in section 17 also, these items are not blocked. That means credit is available. Sure. Goods used in constructing an additional floor of office building at Jaipur. The credit is not available, so the amount is nil. Why? I have given the explanation here. As per section 17.5 clause D of CGST Act 2017, input tax credit shall not be available in respect of goods or services or both received by a taxable person for construction of an immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. So here they are using the goods which is purchased for the construction of their own office building. Obviously it is on their own account. Can they claim the credit? No. Hence, input tax credit shall not be available in respect of goods used in the construction of an additional floor of office building. Clear? Yes. Next item. Packing material used in the factory. So credit is allowed 6,500. Since used in the course of the business and taxable value of outward goods include cost towards packing. So because the value of outward supply will include the packing cost. Agree, as per section 15.2, it includes packing expenses. So in terms of section 15.2C, value of supply includes the packing expenses. So in that case, as you are using it in the business, you can claim the credit of it. Hence, ITC on packing material shall be available. Shall be available. Or else you can just give a simple note telling as packing material is used in the course or furtherance of business, as per section 16.1, credit is available. You can give a note like this also. Here actually I have given a connection for 15.2C also. But if you are not comfortable with it, just mention section 16.1. More than enough. Next. Goods destroyed in flood waters due to natural calamities. You cannot claim a credit of it because there is no outward supply. When there is no outward supply, you are not paying output tax. So in that case, you cannot claim the credit of input tax. Clear? Yes. Section 15.5H of CGST Act 2017, input tax credit shall not be available in respect of goods lost, stolen, destroyed, written off or disposed of by a way of gift or free samples. Hence, no ITC shall be available in respect of goods destroyed due to natural calamities. They have also given a clarity that if these items are supplied as per Schedule 1 of CGST, then it will be it means you can claim an input tax credit. But yeah, it is destroyed by natural calamities. So obviously, it is not covered in Schedule 1. So in that case, you cannot claim the credit on your input tax. Yeah. Last 2 points. Paper purchased for computers printing and for photocopying machine used in administrative office. So on this, credit is available 1250. Last one, inputs used for test or for quality control check. On this also, the credit is available for both. I've given the same note as both are related to the same point. Since used in the course of the business as per section 16.1, ITC is available. Keep it simple. That's all. If something is simple, you also keep the note also as simple as possible. Clear, guys? Yes. So we'll go to the next question. Next question is completely theoretical question, which is asked in December 2019 for 5 marks. Briefly explain about the apportionment of credit and block credit under section 17 of CGST Act. So what should you do here? The evaluator expect you to explain section 17 here. 17 here. Yeah, actually 17 has various subsections, totally 5 subsections, but subsection 5, I don't ask you to explain it because it is very lengthy section. So that subsection 5 itself will be like for 5 or 10 marks. So what I suggest you is, see, here also I have explained all 4 subsection in detail. I have explained subsection 1, 2, 3, 4 as it is. I have explained it. Clear? And here you can also exclude proviso. If you are not comfortable explaining proviso, you can exclude it, no problem. But section 15, you at least mention like this. That is, section 15 specifies the list of input and input services, the input tax on which is blocked under GST. At least mention this much. That you know section 17.5, but as the question is only for 5 marks, I am not explaining it. Don't write a note for it, but it is like, okay, you are showing the evaluator. I also know 17.5, but as time doesn't permit me in the exam, I am not explaining it. Because you can observe here, already we have explained, four subsection itself will take so much of time. Agree? So this is a question asked in the exam, guys. So please be careful. So 17, if they have asked you to explain, you have to explain as it is. Okay, means the words here and there, if you change also, it's fine. It's not like, okay, you define something. You cannot write as it is. Okay, yes, here and there some small changes in words or anything can happen, but still try to keep to the same points whatever is given under section 17.1 to the extent possible. To the extent possible. Clear, guys? Actually, even in the suggested answers given by ICSI, see, for every attempt, the suggested answers will be released by ICSI. That is your institute, guys. Clear? Some of the answers are not up to the mark, and some of the answers which they have given is as per the old provision. For example, if the question is asked in December 2019, the answer is explained as per the provisions which was applicable in 2019. Okay, so whatever answers I have given is as per the expectation of the institute, plus if there is any corrections and all, I have made it and I have given the solutions, guys. So please do follow whatever solutions I have given in the material. If you present that much, more than enough in the exam, guys. More than enough. To the extent possible, even I have followed whatever suggested answers given by the institute only, but wherever I feel the change is necessary, I would have changed the pattern of the answer. Clear? Actually, in the suggested answer, they have not touched this point only. They have not mentioned anything with respect to 17.5. But I don't agree with it because you cannot completely ignore something which is covered in section 17. At least give one point on it. If you don't explain it is also fine, but at least mention that section, what it talks about. Clear? Yes, sir. And if you guys, if any of you are referring to the suggested answers, so some of the answers would have been outdated, guys. Why I'm telling you? Because the answers, whatever is given, for example, for December 2019 attempt or June 2019 attempt will be as per the provisions which was applicable for that exams, not which is applicable for the future exams. So whatever we are doing now is for December 22 exams or onwards. So whatever answers I have given is with respect to the provisions which are applicable for the present scenarios. Clear? So please strictly follow whatever is given in my material. Fine, guys? Sure. We'll continue with 7th question, 7th problem. Ginia is a garments manufacturer registered under GST. It received a government order for making garments for defense personnel exempted from GST under a special notification by the government of India, for which it procured fabric separately. Now, Ginia is a supplier who has received the order from government, okay, to make some garments for defense personnel, which is exempt under GST. Okay. For Genia, the outward supply is exempt. Okay. Now, to provide outward supply, she has purchased something called as fabric. Okay. So fabric is what? Inward supply for her. Okay. To execute the work, Genia also procured buttons, threads, colors, and lining materials, which are also used for the production of other goods in the factory. So these are again the inward supplies for her, which she is using to provide both taxable outward supply as well as exempt outward supply, because she is using this as a raw material for other goods also. Okay. The input tax credit available in respect of thread, buttons, and collars for the month of January 2021 was 25,000, 45,000, 50,000 respectively. And the taxable and exempt supplies during the month were 10 lakh and 2 lakh. So the taxable turnover is 10 lakh, exempt turnover is 2 lakh. Calculate the eligible ITC that can be availed by Genia for the month of January 2021 in respect of thread, buttons, and collars. Okay. See, J, let me mention J. J is providing outward supply for defense personnel, which is exempt. She is also providing other outward supply, which is taxable. Okay. Now, she has taken some inward supply, which are those? Thread, buttons, collars. T, B, C. Thread, buttons, and collars. So she has taken inward supply of what? Thread, buttons, and collars, which she is using for the purpose of providing outward supply, which is exempt, as well as outward supply, which is taxable. So they have also given the turnover. The taxable turnover is 10 lakh, it seems. Exempt, sorry, this is exempt. So exempt turnover is 2 lakh. Taxable turnover is 10 lakh, it seems. So based on this, we need to apportion the credit of TBC. Okay. So whatever is attributable to taxable part, taxable outward supply, only that much credit can be claimed here. Okay. So this question is actually related to 17.2, guys, where an inward supply is used partly for providing outward taxable supply and partly exempt outward supply. In that case, whatever is attributable to outward taxable supply, only that much credit can be claimed. How to calculate that? I've explained it by giving an example also. Let us see it. This is a question asked in June 21 for 5 marks. As per, first explain the provision. As per section 17.2 of CGST Act, read with rules, if goods or services or both are used by a registered person partly for affecting taxable supplies, including zero rated supply, and partly for affecting exempt supply, the amount of credit shall be restricted to so much of input tax as is attributable only to taxable supply, including zero rated. Even zero rated is also taxable supply. So in the given case, thread, button, and collars are used for affecting both taxable as well as exempt supply. So credit attributable to exempt supply, how to calculate it? Common credit. So whatever input tax is paid on this thread, button, and collar is a common credit. We call it as common credit into exempt turnover whole divided by total turnover. You will get, okay, out of the common credit, how much is attributable to exempt part. Now, let us do the calculation. In the given case, common ITC credit. So on this thread, button, collar, how much credit, how much tax you have paid? 25 plus 45 plus 50. Okay, so total comes to 1,20,000. So the total input tax which is paid on the inward supply which is used for both the purposes 1,20,000. So what is your exempt turnover? 2 lakh. Total turnover 10 lakh is taxable turnover plus 2 lakh exempt turnover is 12 lakh. So how much credit is attributable to exempt supply, guys? 1,20,000 is the total credit divided by total turnover into exempt turnover will give you what is the credit which is attributable to exempt supply, and you cannot claim the ITC of this. Remaining is how much? Total credit is 120. So credit attributable to exempt supply is 20,000. So what is the remaining credit? 1 lakh. You can claim that much. Hence, Genia would have to reverse ITC of rupees 20,000 in his GSTR 3B in the month of January 2021, and only 1 lakh can be availed by Jinia, okay, not June, Jinia, as ITC in the respect of thread, buttons and collars. Clear? Yes, sir. So whatever is attributable to taxable supply only, you can claim it. So how to calculate how much is attributable to taxable supplies? You can calculate what is attributable to exempt supply, reverse it. So remaining credit, you can claim it. So the total credit is 120. The credit attributable to exempt supply is 20. So reverse that. So what is the remaining credit which you can claim? 1 lakh. Clear? Yes. So this is what the solution of question number 7 is. Yeah, let me proceed to the next question. Next question. Yeah. Parthiv Chemicals Private Limited is a manufacturing company registered under GST in the state of Maharashtra. It manufactured 2 taxable products, Sun and Moon, and 1 exempt product, Jupiter. Okay, it manufactured 2 taxable products, Sun and Moon is taxable and Jupiter is exempt. Okay. On 1st October 2018, product Moon got exempted. Okay. Moon was actually taxable. Now from 1st October 2018, it became exempt through an exempt notification, and exemption available on product Jupiter got withdrawn on the same date under the same notification. Oh. Let us just analyze the situation. 1st October 2018 is like in between date. So before this, Sun and Moon taxable. Sun and Moon taxable. Whereas Jupiter was exempt. Okay. But after 1st October, it is different. Moon got exempted. So Sun and Jupiter is taxable, whereas Moon is exempted. Moon is exempt. This is the scenario, guys. Yeah. So here the important date is 1st October. Okay. Next. Whenever the question, if you feel complicated, try to break like this. Okay. Try to break the lines or points one by one. The above registered supplier has furnished the following details. Amounts are excluding GST, chargeable at 18% GST. Okay. Whatever amounts given here is excluding GST, and the GST applicable is 18%, guys. Okay. First point. Machinery L purchased on 22nd October 2018 for being used in the manufacture product Sun and Jupiter. Machinery L is purchased when? 20th October 2018 for being used in manufacturing product Sun and Jupiter. Okay. 22nd October means it is falling here. Okay. To produce what? Sun and Jupiter. Can they claim the credit? Yes. Sun and Jupiter both are taxable from 1st October. So you have purchased some machinery, which is a capital goods, to produce something which is taxable. So can you claim the credit? Yes, sir. I can claim. Okay. Next, purchase date also is important here because it is purchased after 1st October. Because Jupiter became taxable from 1st October. Okay, so credit is fully available. 1,20,000 into 18%. Please be careful here. The amounts given are not GST amount. Where they have given the values. So you need to calculate the GST amount. So in an hurry, you may miss that point. You can straight away take 1,20,000 as a credit anta. No. Please be careful. Whatever amount they have given is the value part, not the GST part. Okay. Next point, B. Machine M purchased on 1st October 2015, OB Raikala, used till 30th September 2018, exclusively in the manufacturing product Jupiter. Okay, it was exclusively used for the purpose of producing Jupiter, which was exempt. Okay, Jupiter was exempt before 1st October, na? Yes, sir. So this was purchased when? 1st October 2015. 1st October 2015. Okay, long back. So till September 2018, it was used exclusively to produce Jupiter. However, from October 1st Said machinery will be continued to be used for manufacturing Jupiter. But from 1st October, Jupiter became taxable now. So can I claim credit? Yes. Which section is applicable? 18 1 year. So this is one question which is asked on 18. That to a point of the question, not the entire question. Clear? So I repeat. So capital goods was purchased on 1st October 2015. Okay. Now this was used to produce Jupiter. Jupiter was exempt till 1st October 2018, but after that it become taxable. So can I claim the credit of whatever capital goods I am having on 30th September immediately preceding day? Yes, you can claim the credit. You can claim the credit. But here, sir, capital goods is older. See, for all the 4 cases under 18(1)(a), B, C, D, a time limit to claim credit is within 1 year. But actually, 1 year they have not specifically mentioned whether it is only for inputs or capital goods also. They have just mentioned the credit has to be claimed within 1 year. Clear? But if you observe, in many of the cases on capital goods, even if it is older than 1 year, credit is allowed. Even if it is older than 1 year, credit is allowed. So that means for claiming the credit on capital goods, that 1 year limit is not applicable, which is given under subsection 2, guys. I repeat, because there is no clarity in subsection 2. They are just told the credit should be claimed in all the 4 cases. Credit should be claimed within 1 year from the date of invoice. Clear? So it is understood that if I read the provision there, it is understood that it is applicable for both input as well as capital goods. But in many of the problems solved, whether it is in ICSI study material or as per the suggested answers given to the exam questions in the suggested answers, what they have done is they have not applied 1 year for the capital goods. That 1 year limit they have not applied for capital goods. Means even if the capital goods was purchased 1 year before, or even if it is more than 1 year older, still credit is given under section 18(1). Clear? That to 18(1)(a), capital goods will not come, A and B. Only under C and D, clause C and D, capital goods will come. Only there you will have this confusion. So you guys also can follow the same thing. That 1 year time limit, you need not apply it for only for capital goods. Whereas for others, inputs in the form of raw material, WIP and finished goods, it has to be claimed within 1 year. Clear? So this is as per the trend followed by ICSI. So let us try to stick to it only, because even in the law, as there is no clarity, so it's better to follow our godfather, who is ICSI. Chalo. Yeah. So this, what should we do? What is the amount of credit? We need to calculate 5 lakh into 18%. From that, you need to check how many quarters are there from year to year. Reduce that much. Reduce that many quarters. From 1st October to 30th September, how much ever quarter is there. Till 30th September, you need to calculate how much ever quarters are there. You have to reduce that much. 5% for each quarter or part of the quarter. Okay. Let us do that calculation later. Next. Raw material used for the manufacturing of sun purchased on 9th October. Check sun taxable. Yes. So credit is allowed. Then raw material used for manufacturing moon purchased on 10th October. Now moon has actually become exempt from 1st October. So this raw material is purchased on 10th October. So moon is exempt. Can you claim the credit? No. You cannot claim credit on 4 lakh. So raw material used for manufacturing Jupiter purchased on 16th October, you can claim it. And please be very careful. I am repeating the point. Whatever amounts given in the question. See, in some questions they have given directly GST amount. In this question, they have not given GST amount. They have given the values excluding GST. So on this, you need to apply GST rate and calculate how much is the GST or input tax. So don't take this amount directly, guys. Okay. All purchases are out from outside the state from registered supplier. No problem. Whether the purchase is within the state or outside the state. I am not under composition scheme or anything. So there is no restrictions. You can purchase it. Compute the amount of input tax credit ITC to be credited to electronic credit ledger for the month of October 2018. So what is the amount of credit which can be credited to electronic credit ledger? Means whatever credit you are eligible for, that amount will be credited to electronic credit ledger. So how much is that? One by one. Machinery L is purchased for 1,20,000. It is used for the manufacture of Sun and Jupiter. Both are taxable, and it is purchased on 22nd October. So both Sun and Jupiter are taxable in October. So on the 1,20,000, 18% GST, that is 21,600, you can claim full. I have given note 1 here. ITC in respect of capital goods used or intended to be used exclusively for affecting taxable supply, including zero rated supplies, shall be credited to the electronic credit ledger. Okay. Next, coming to machinery M, note 2, 36,000. This is actually important. This is the important point here, which is actually on section 18. Yeah. So 36,000, let me show the calculation here. Where any capital goods earlier used exclusively for affecting exempt supply is subsequently used for affecting taxable supply, the value of capital goods being machinery M shall be arrived at by reducing ITC at the rate of 5% for every quarter or part of the quarter, and the amount so arrived at shall be credited to electronic credit ledger. So previously you were not eligible for credit, but now from 1st October you are eligible because your exempt supply became taxable. So how much is that? 90,000 is the amount of GST. Agree? Means the value of supply is 5 lakh. On that 18% you apply. You will get 90,000. Okay. From that 5% for each quarter, 12 quarters. So 12 quarters should be counted from when to when, guys? From 1st October to 30th September. 30th September. That is the date on which you can claim the credit. Whatever capital goods you are having on 30th September, you can claim the credit. So how many quarters from year to year? You have to count it. So totally there are 12 quarters. There are 12 quarters. Clear? Yes, sir. So for 12 quarters, 5% for each quarter you reduce. So that is 90,000 into 5% into 12 quarters, which comes to 54,000. Remaining 36,000, you can claim it. Remaining 36,000, you can claim. Okay. Then coming to raw material used for manufacturing sun. So 2,20,000 is the transaction value into 18%, you can claim the credit because sun is taxable. Next, raw material used for manufacturing moon, credit is not available because moon is exempt outward supply. So note here, ITC in respect of inputs used for affecting exempt supply will not be credited in electronic credit ledger as credit is not available. Then raw material used for manufacturing Jupiter. Jupiter is a taxable product. So it is means credit is available. Note 1, 18,000. Just a second. So for this also you have to write note 1, guys. That is with respect to whatever raw material you are using or machineries you are using for the purpose of providing outward taxable supply. I have given one common note. One common note for all three, which is note 1. Clear? Yes. So just make this as note 1. Chala, guys. So we are done with question number 8. Okay. See, this is the only question where a part of the question is on section 18, guys. Okay. Nowhere else. All the other questions are asked on section 16 or 17 only. But still, as I have told you guys, section 18 is also related to other topics like registrations and all. So it is important. So please do remember the provisions and do study it. Don't skip it. Okay, I don't suggest, because if something is not at all important, even if in the future also, I will mention it. Okay, this is not so much important. You can just go through it once. But section 18, I feel somewhere that they may ask question at least in the upcoming exams also. So please do study it. Fine. So we are done with 8 problems. So 9th question is actually on next section, that is section 19. We have not yet covered it. So we'll stop it here, guys. We'll stop this video here. We'll continue in our next video from section 19. Just a second. I will just come to there. Yeah. So okay, guys, we'll stop this video here until we start the next video. Study well. Take care, guys. Bye-bye.